We are Prologis. You probably know us best as the global leader in logistics real estate. We own, operate, and develop high-quality industrial properties in the world's most dynamic consumption centers. We have over 200 billion in assets under management, and we capitalize these activities both in the public markets and the private markets. So this 200 billion plus of AUM is 1.3 billion square feet across 20 countries, and we're serving nearly 7,000 customers. We also have a very large development platform. Really, our development franchise is second to none. Over the past 20 years, we've delivered over 48 billion in modern logistics facilities. That's creating over $14 billion in value over that time. Our land bank today actually supports another 42 billion of development. That's actually more than 240 million square feet we can build on land that we own or control. So we're really positioned for significant future growth. We also have a strategic capital business where we manage nearly $65 billion of third-party capital. With this, we have the flexibility to fund long-term investments, harvest development profits, and generate recurring fee income. So that's the foundation of the company. But really, that's just the beginning. With the scale of our footprint and the quality of our real estate, we're positioned to capture opportunity as it unfolds. So right now, AI is driving incredible demand for data centers. And our platform is actually built to meet this demand. Over the long run, this could be actually a 10 gigawatt opportunity for us. At the same time, AI is fueling demand for energy. And here too, we're way out in front with nearly 1 gigawatt of solar. As a matter of fact, we'll have 1 gigawatt of solar and battery storage installed by year end 2025. So these are really exciting times, and we're really in a great position. Sure. So let's go back to the start here. So our current CEO, Chairman and CEO, Hamid Moghadam, he co-founded A&B in 1983 in San Francisco, which is where I am today, alongside two partners, Doug Abbey and Bob Burke. It began as a private real estate firm focused on commercial properties. But in the late 90s, Hamid saw something coming. He saw the rise of e-commerce and the demand that it would place on logistics real estate and the pressures on other product types. So the company pivoted, sold off retail, sold off office, and really doubled down on industrial. A&B went public in 1997, bringing 2.8 billion of managed assets into a single transparent REIT vehicle. Then in 2011, coming out of the financial crisis, A&B merged with Prologis. And from there, we've experienced tremendous growth. And today, we're one of the largest REITs in the world. Yeah, sure. So the long-term case for logistics real estate is really strong. And we built our business in the top consumption centers around the world. As a matter of fact, $3.2 trillion worth of goods flowed through Prologis facilities in 2024. That's the equivalent of 2.9% of global GDP. E-commerce is continuing to expand, and we're also seeing our customers continue to rethink their supply chains with a focus around speed, resilience, and sustainability. So this is creating real durable demand for well-located modern space. Also, it's getting much, much harder to build. Land is scarce. Entitlement timelines have continued to expand. Construction costs are high and growing, especially in these major metros where we focus. In many places, rents don't justify new development. So that imbalance actually sets the stage for tighter supply, higher occupancy, and rent growth going forward. And this gives us tremendous confidence in our business. So think about that. That's the foundation. Now layer on value-added services. We have a business called Prologis Essentials where we're helping our customers fit out their spaces. We have a tremendous data center business, an energy business. If you look at the unprecedented demand that AI is driving and the need for digital infrastructure. It's a massive opportunity for companies that have the real estate, the power, and the know-how, which is Prologis, and we'll absolutely deliver on this. Yeah, the main pushback we hear today is really around the timing of an inflection. Investors really want to see fundamentals re-accelerate after a couple sluggish years. We'd agree the market is still working through excesses from a post-COVID boom, but the setup is definitely improving. Deliveries are falling, new starts are at decade lows, and supply is shifting from a headwind to a tailwind. So when absorption picks back up, we think there's a lot of room for rents to grow with elevated construction costs. And in the meantime, our in-place rents are still rolling up to market rents, which will drive earnings growth even before fundamentals inflect. So we're in a really good spot. So when you invest in Prologis, you're backing a world-class team with a track record of growth and value creation, and you're doing so at scale. We strive to compound your capital with a fortress A-rated balance sheet and have done so without issuing common equity outside of M&A in over a decade. So looking ahead, we think logistics, data centers, and distributed energy systems will play a huge part in defining the next decade. So if you like the fundamentals in those spaces, we're very well positioned to capture that upside.